Hey, welcome to the daily stock review. Today we're going over Tesla. Goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor, 2,500 hours into that journey over the last 7 years, and I'm sharing the lessons along the way. Today, how we're going to do it is go through the stock analysis, and in future videos, we'll go through YouTube, comment questions and answers, and review goals as we get more of an audience. Here's my investing process. There's 5 steps. Today we'll go over where I found Tesla and came across it, and then do a 5-minute check to see if Tesla's worth looking at further and spending more time on it. I learned from these guys. They did pretty well for themselves over a fair few decades, so I want to follow in their footsteps by learning from them and trying to emulate that success. All right, let's crack in. How I start everything is go straight for the annual report and the latest one, and we'll just be cracking straight into that. So I can see that the latest one here is in Tesla's investor relations area, 2025. It's PDF. So we're just going to jump straight into it. There will be a contents page. We'll jump into that and have a look. Pardon me. And what we're after, first of all, is pretty much the financial statements. We want to be able to have a look at that and go through those details. Is the link going to work? No siree, boss. All right, let's just go page 45. All right. So first of all, how did I come across this business? Tesla's been everywhere for a long time, in the news and things like that. So being able to identify different businesses that pop up in the media and things like that is another way, an area that you can find businesses to review. So that's where I came across it. What we're also going to do is the things that I'm looking out for at the moment as we go through this next stage are, in a 5-minute check, what I want to do is, first of all, I want to be able to look and see if the business has mastered its customer. So whether that be through having a look and seeing different ratios of profits and things like that. Are they actually making money? Is always a pretty good one. And then I want to have a look at, has this business got a moat around it? So you can see that in the financials, and great businesses, even very early on, will be able to show that they have a moat and they're starting to establish it because they've got better profit margins compared to competitors. So we can usually see that, and if it's healthy, we can look from that. Tesla, from already looking on the outside, has an exceptional brand, and sure, it gets tarnished from every now and then, like compared to the masses, but the people that actually want Teslas are at the initial adoption phases are different kinds of people. Then the next one is management. So I think that management are allocating the money in the business effectively? So let's have a look through those. What I'm after at the moment is I want to look through the income statement first of all. So consolidated statement of operations is the income statement. And we can see revenues. So it's got automotive sales, automotive regulatory credits, blah, blah, blah. So where's our total? Total automotive revenues. And this is in millions, except for per share data. So over 2023, 24, 25, we can see that 82, 77, 69. So the actual revenue that they're getting from automotive is actually decreasing. So that's an interesting point. Usually we want to see growth. So this figure actually in revenue is usually increasing. So let's not write it off yet. Let's keep going through. Energy and storage. So pardon me. Total revenues. So you've got energy, generation and storage, services and other. So what part of services and other in this energy generation and storage is actually growing? And so we can see that that's kind of offset these amounts down here in total revenue. So 96, 97, and then 94 billion. Cost of revenues. So we want to see what the gross profit is. And because they've got a couple of, it sounds like 3 different arms of the business, so the automotive side, energy, and then services and other, there's different costs that come out of those. So let's just have a look. Gross profit, 17 billion, 17 billion, 17 billion. Okay. Research and development. So where are they, this is part of where are they ploughing some of that money? So it's significant. It's increasing year on year. And selling, general, and admin is increasing as well. If the business didn't have the 3 arms and it only had the automotive, selling, general, and admin, if it was a bit of a long-term play, and they're obviously expanding their base to try and increase how many units that they can sell, that would be a reasonable sign. But it can also be something to keep an eye on. We don't want the cost base of the business blowing out. Restructuring and other. Okay, so these are kind of one-off payments that will come up. And so we just want to make sure that if that becomes a constant thing, we take that into account. Interest, blah, blah, blah. What's our net? So net income at the bottom line. So it's actually decreasing, but these GAAP, which is a type of accounting terminology for how they pretty much put all the money into different buckets. That isn't the end of the story. Okay, so net income, net income looks like it's decreasing. Let's go and have a look at the balance sheet. So assets for Tesla, like knowing that it's still a large business and it's still expanding into different areas of markets, we will expect the assets to be increasing. And that's the case from 24 to 25. It's increased from 122 billion to 137. Property, plant, and equipment is a key one that we want to keep an eye on. So that's increased by around 5 billion. And short-term investments, cash and cash equivalents. All right. What about liabilities? So we just want to make sure, like, what's the kind of health of the business? Just a quick check. Just want to make sure it's not loaded up with a heap of debt and things like that. So other long-term liabilities, debt and finance leases, deferred revenue are pretty minimal. And what else we got? Accounts payable, accrued liabilities, and other. So all these are a lot smaller, and total liabilities is a lot less than the total assets of the business. Next kind of check is we can have a look at the total current assets. So that's pretty much what they've got that could be turned to cash within 12 months. And so they got 68, and compared to their total liabilities, which covers the short and the long term, they've got enough assets to cover that. So this is a pretty healthy business, or at least the balance sheet is showing that it's pretty healthy. All right, we've already had a look at the income statement. Let's have a look at the cash flow. So this helps break down and takes out some non-cash charges, so stuff that actually doesn't affect the cash within the business, and shows with a little bit more detail where management team are actually spending their money. So 2023, 24, 25, we can see that the net income is decreasing. And here's the non-cash charges. So these things don't necessarily affect the actual cash flow within the business. And so we can slap them back in and see what comes out at the end of the day. So all these other accounting adjustments, changes in operating assets and liabilities, prepaid expenses. What else has got? Accounts payable, accrued, and other liabilities. You can see that that one's been increasing as well. Stock-based compensation has increased. So that's always something that you want to keep a close eye on as well. As long as a percentage that it's within, ideally, long term, we want stock-based compensation to be as close to zero as possible, because it's better. But if it's a small percentage of the revenue and the cash that the business is generating, then that's okay. If it becomes a significant portion of the actual cash flow, which we will see soon, that the business is generating, then that's straight up taking away from the money that can be going to shareholders. That's where we're choosing to spend the company's money. Purchase of property and equipment, excluding finances. So what we got here? So net cash provided by operating activities. We can see that when we get to this stage, net income down to net cash provided by operating activities, it's actually been pretty even across the last 3 years. Now, this is an important number because if we get this and we take away the purchase of property and equipment, then that gives us kind of what the business's free cash flow is. So the money after that at the end of the day is what the business has left over to either invest in various activities, or whether it can give that back to shareholders. So it's either trying to grow the company or providing its value to shareholders in some other way. So we can see that if we take that out, we're left with about 4 billion, 3 billion, and then about 6 billion. So it's a little bit lumpy, but going back through and having a look at the trend of this over a period, back further than 2023 would be good. It has been a bit lumpy, obviously, with COVID and different things like that. It did have a pretty substantial effect on the automotive industry in terms of supply chains and things like that, where they would effectively get paid for cars up front that they hadn't produced, and then it would take a lot longer for them to build the rest of those in the factory and then have them given to customers. All right, so then we get through that purchase of equipment and proceeds from maturity of investments. So they're getting some money come in, and then they're purchasing some other investments as well. So that might be things that are short term to keep cash on hand. What else are we looking at? So what we want to have a look around: proceeds from issuances of debt, minimal repayments of debt. So you buy a bit of debt, pay a bit of debt. Principal payments for finance leases, everything's for the proceeds from exercising stock options and other stock issuances. It's pretty small as well, like we were talking about. So to be able to put the money on the table for the stock options that they may be doing in terms of compensation deals for employees and things like that, how much money do they actually have to splash out for it? That figure was larger. It was close to about 2.5, 3, and the actual number that they have to actually put out for this year in terms of cash is less. But we can anticipate that it'll be trending up as those share options come out. And we also want to make sure that those shares that are coming out or being generated to provide some form of incentive to management is for the right reasons. So if we were looking at this business further, we'd want to go and have a look at those things as well and see how they're actually being incentivized. Where's the goal that they're trying to hit? Is it a bunch of short-term metrics, or is it for long-term things? And looking at how overall that Elon and the other businesses that he's come up with, they are very long-term. So, cash flow statement, it's interesting. It doesn't obviously jump straight out and say, yep, this is the perfect business because everything's growing in the right direction. It does have a few things that it's obviously got free cash flow and it's generating that. It's then got to make a few decisions about where that money gets invested. So in what portions of research and development? Is it within Tesla? Is it within the other arms, the energy and storage and services and other? And then going through that. So straight up, we can see that obviously Tesla's a pretty big business. For my interests, I think I am going to have a look and do a bit more homework on it. Tesla has always been one of those hot stocks that always gets discussed a lot. And I think having a bit more of a deeper understanding of it would be a good thing. So I will be going back through it and doing another review. We can see that. Let's just check out the stock price. Easy enough. Go to the 5 years and then go to max. So you can see that, back in 2019 is when it really popped off. And then the valuation has been very high since pretty much before then. So price to earnings ratio is about 288. I wouldn't mind going through and doing a valuation of Tesla. But in order to do that, to come up with where we think some of the growth of the business is going to be and have some pretty conservative ranges for that growth, will be important to know a lot more about the business. So we'll leave it there. If you guys enjoyed this and want to see other businesses get quick reviews like this and you guys want to keep an eye on them, feel free to subscribe. If you have any other questions and comments and things like that, drop them down below. I will be reviewing them in upcoming videos. And otherwise, check out this next video because YouTube reckons you'll like it. Cheers.